It's Tuesday, March 31st, 2015. My name's Dez here at Grok Trade. This is the last day of March, and we end in bearish territory. We have the Dow down 200 points. That's after yesterday's rally of 263 points. So the market's very turbulent going into today's close. And here we're taking a look at the spiders, down 0.87%, the Dow down 1%, Q's down more than 1%, and you have small caps down 0.32%. So small caps faring better than everybody else. So is the banks. Banks here, only down 0.27%. So you have bullish underlying factors here saying that we could continue higher. Precious metals do slide a bit, not too much. And here we are looking at the spiders. This is a daily chart, and yesterday we talked about all these new lines. Make sure that you get these new lines on. What I'm going to do is quickly bring over some data here so you could get this swing low, and this is October here, 2014. Hit the highest close of that area to the highest close here, February 2015. That'll bring you here to the highest close. Actually, we don't touch that. It's the highest close, actually, that just happened a couple days ago. And then the swing highs, and this is in 2014 coming across to February 2015. That will help you draw the big rising wedge. You see the blue lines here, rising wedge. That's very bearish, and that is a sign that this thing could start breaking down. And if we zoom in to trading view here, I love how you can maneuver these charts. I have these red lines, last two swing highs, last two swing lows, and that gives us a pinching pattern within the lower part of the rising wedge. So we have a symmetrical triangle in the lower part of the rising wedge, and we're dropping on a nice tick higher on volume. So here's the danger. The danger is this. If this starts to crash and it breaks through these areas of support, woe to the markets. I'm thinking that the markets have a very decent chance of a nice slide southbound. However, because of how the markets ended today with some bullish underlying sentiment on small caps and banks, I think that we may just continue to chop around between this trend line and the blue one coming up here. And if that happens, it's just going to build more and more strength for a big run one direction or the other. And let's go here, take a look at some stocks of interest. I like to look for 2% moves or more. LinkedIn was down more than 2%. Ooh, gnarly little drop here. And if you're utilizing TradeView, if you click on the little light bulb here, you'll see people like here are two people saying warning. Yellow means warning, and sure enough, those warnings should have been heeded. The markets have since dropped. If you go to Apple, you'll see a few more dots. These are people's opinions, and yeah, this is Apple here. A lot of warnings, warnings, warnings. Here's a red. Somebody said looking to short. And sure enough, nice drop after that. So pretty decent call. And if you go to BABA, take a look at that. I actually called a buy right there. It shows a triangle, but you'll see it as a circle. Still holding BABA. And also GoPro. Called it a buy right there. That's me. You can see my name and stuff right here. You can actually follow me. Just go here and follow me, and when I do calls, you'll get an alert and be able to follow what it is that I'm doing. And you can sign up for TradingView free of charge. Sounds like I'm selling this thing. I don't get anything for selling it. Anyway, it's a free service, by the way. You can't upgrade. Stocks overall, though, everybody down on the tech side. Taser was down 2%. It's showing a nice rally here, but it's starting to show a little bit of weakness. And that's where we are at. Very dangerous time here in the markets. It's something to be taking paying very close attention to, especially the spiders here. So this, all eyes are on this. Oh, by the way, here's a call out I did on the spider as a buy, and it just went up, 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 up. And then we've since dropped and chopped around. So anyway, we'll catch up with you guys later on.